Well, hi guys, you're watching Money Control live stream. I'm Nandita Khemka and you're watching Opening Bell with me right here. The cues coming out of global markets are fairly mixed this morning. The GIFT Nifty started the day on a positive note, but we have, we have seen the GIFT Nifty slip into the red, 21,930 or thereabouts. That's where the GIFT Nifty is at. Looks like we are poised for a mildly negative start for the Indian market as well. Remember, it's the FNO expiry today, monthly FNO expiry today, and looks like we are poised to end below that 22,000 mark. But of course, lots lined up over the next 30-35 minutes or thereabouts. We have guests coming in, and we'll be talking about the setup, the stocks that be in focus, the mega JV announced by Reliance and Disney. That will also be in focus. We'll be talking about that and how it may change the landscape in the media sector going forward. So lots lined up. But before we move forward, let's take a look at the top headlines at this hour. Well, the Dow slips for the third straight day, while the S&P 500 and Nasdaq too fall ahead of personal consumption expenditure data due later today. Asian markets trade mixed, with the GIFT Nifty marginally, it was marginally higher, but now it has slipped into the red. Shriram Finance will replace UPL in the benchmark Nifty 50 index. Jio Financial, PFC and Adani Power will also be making their entry into the Nifty Next 50 index. The changes will be effective from the 28th of March. Reliance drives a hard bargain to clinch a mega deal in the entertainment space, strikes a deal that values Disney's India business at around $3 billion against earlier estimates of up to $15 billion. Now, the joint venture, valued at $8.5 billion on a post-money basis, will see Reliance Industries injecting 11,500 crore rupees into the venture. And Q3 GDP data will be released later today. Third quarter GDP is seen growing anywhere between 6.5% to 6.7% versus 4.5% a year ago. Well, let's first talk about some cues for trade. If you look at the Nifty yesterday, we just about managed to end around that 21,950 mark. So according to the pivot point calculator, the next level to watch out for in terms of support on the Nifty would be somewhere around 21,912, and on the higher side, the resistance level is seen at somewhere around 22,152 mark. If you talk about the Nifty Bank Index, it has ended below the 10, 21 as well as 50-day exponential moving averages. So, of course, we've broken below the key level of 46,000 on the Bank Nifty. So now the next support level, according to the pivot point calculator, is somewhere around 45,846. That will be a crucial level to watch on the downside. On the upside, you have levels like, you have something like 46,535. That will emerge as the next crucial level on the upside. Of course, we will also be getting our technical expert on the show, and we will be talking about where he expects the Nifty to end the FNO Feb FNO series. We'll be talking about that as well with him. But if you look at the FNO cues also coming in this morning, the Nifty open interest is up 4.9%, and if you look at the rollover data, that stands at 67.6%. When it comes to the Nifty Bank Index, open interest up 0.8%, and the rollover data there, at 59.1%. Nifty PCR stands at 0.66, and if you look at the stocks that are in FNO ban, still in FNO ban, they are Indus Star as well as SAIL. But stocks that are coming out of the FNO ban are Aditya Birla Fashion, Canara Bank as well, and Z is the other counter that will be coming out of the FNO ban. But on that note, let me bring on board a technical expert on the show. Joining me is Chandan Taparia of Motilal Oswal. Great to have you on the show, Chandan. On the Nifty, we have, of course, broken below that 22,000 mark. That was a crucial level or psychological level, so to say. So do you think the Nifty Feb FNO expiry is likely to happen below that level, or do you think there's some buying on dips that would happen and perhaps we could end above that 22,000 mark?
Good morning, Nandita. Thanks for having me. So index was comparatively doing well, but yesterday it tumbled down from higher levels. It was trying to surpass 22,222, but has been consolidating and finding some pressure or absence of buying interest at higher levels. However, we corrected by more than 200-250 points from higher levels, but even after that, there was no major selling in the Nifty, but selling was there in the Bank Nifty and selective mid-cap, small cap. So that is the only concern. But if you look at the Nifty index, we are still holding the gains. Major trend is intact. Even on series basis, we are up by around 2.8%. But yes, weekly basis, we are slightly down. So we are slightly higher than monthly volume weightage average, but lower than the weekly volume weightage average. And we have broken the key support of 22,050. So because of that, upside could be kept and some more profit booking decline could be there. Being the Thursday and last Thursday of the month, we have monthly expiry, so some more roller coaster ride could be there. And we believe that till it holds below 22,050, some more decline or some more profit booking could be there in Nifty index towards 21,800 level. Now talking about Bank Nifty index, Bank Nifty was holding above is 50 EMA, but on last trading session it drifted below the same, and now it's flirting 50-day exponential moving average. And we believe that till it holds below 46,250, some more decline could be there in Bank Nifty towards 45,500. So overall, we are expecting broader range to be work in indices, but upside could be kept. Sell on bounce could continue because the hangover of the last trading session will still have impact with kept upside in Nifty and Bank Nifty in the market.
All right, those are the levels to watch out for on the Nifty and the Nifty Bank. Hold that thought, Chandan. We'll come back and talk about specific stocks as well. But let me also bring on board, Kunal Valia of Statlane, who's joining in this morning to talk about, the latest advisory from SEBI on mid-cap and small-cap mutual funds, on how, there has to be an investor protection policy in place to safeguard investors from the froth that is building up in the mid-cap end of the markets due to the sharp run-up that this end of the market has seen. Great to have you on the show, Kunal. Of course, we've had this advisory coming in from SEBI. In some ways, it was actually the continuous flow of funds into the mid and small cap schemes that was driving the kind of rally that we have seen, in this end of the market. Now, would the restrictions or SEBI regulations mean that the fresh money, it could actually stem the flow of fresh money into these schemes?
Good morning, Nandita. Any measure which SEBI has taken over the years has augured well for the growth of the industry as well as the interest of the investors. So I think it's a very productive step, a step which is planned in advance by the regulator to deal with any uneventful distress situation which leads to a lot of redemptions on mid-cap and small-cap funds. So I think it's a step which is well planned in advance. This is done because if you go back to 2018 and 19, there was credit crisis and there was a lot of issues relating to credit fund redemptions at that point in time. During those days, the regulatory framework played a catch-up after the event happened, and thereafter led to side pocketing, etc., to help the investors and the fund managers go with the situation. But I think this is something which is well planned in advance, and it will enable both the fund management industry as well as the investors and help the growth of the industry even better.
Right, but will the SEBI advisory cause forced selling, when it comes to the mid and small cap universe?
Let's look at some numbers which will give us some insight in terms of why this framework is being discussed right now. For this financial year, small cap funds have received approximately 35,000-40,000 crores of inflows, and mid cap funds are somewhere around 18,000 crores to 20,000 crores. Again, a good year compared to last year. Given the inflows, there is a concern that if there is a redemption coming in a big way, the fund managers will have liquidity issues at their end. I don't see any kind of a forced redemptions coming from the investors at this point in time. The fund managers as well as the fund houses have been very judicious in their approach to taking inflows in last 6 to 8 months. Some of the funds, as you know, have capped the investment amount, lump sum investment amount, as well as the SIP investments, which can be done from one investor. So they are already proactive in trying to take inflows, etc. But I don't see a case right now for any distress situation relating to redemptions on the mid cap and the small cap side.
All right, so last question really, how can mutual funds ensure that investors who redeem first don't put the investors staying back at a disadvantage here?
Right. Just like the side pocketing instrument came into picture way back in 2018-19, I think there could be some other measures which can be considered both by the industry as well as the regulator. One of such measures which exists globally is gating. The gating as a measure acts as a brake to slow down the pace of redemptions such that the impact is less on value and liquidity of the portfolio. I would stress further that what happens when there is a large redemption on a particular day, the portfolio makeup also goes for a toss because the typical tendency of the fund manager is to sell the liquidable holdings compared to the illiquid holdings, and thereby the weights to the illiquid holding goes up. But gating acts as a brake in a very meaningful way when designed appropriately, such that both the investor community as well as the fund management community is able to deal with the situation in a much better way without impacting performance of the portfolios in a big way. So I think gating is one very important measure which possibly can be considered both by the regulator and the industry. Just to give you more insights on gating, the way it is done in some of the developed markets, there are two levels of gating. One is a fund gate and there is a investor gate. In the fund gate, the redemptions are curtailed at the fund level, aggregate amount of redemptions allowed on one particular day. At the investor gate level, redemptions are curtailed at the investor level as to what proportion of holdings a particular investor can redeem. Gating done always helps in equitable treatment to both the redeeming investors as well as remaining investors. So I think gating is one of the measures which can be considered given the situation where we are today.
Right. With that, Kunal, thanks a lot for taking out time and joining in this morning and sharing your perspective with us. Appreciate your joining in this morning.
Excellent.
Well, with that, we are just about, I think, half a minute away from market open. But coming to Chandan. Chandan, very quickly, what would your strategy be for the day, given the fact that it's expiry?
Yeah, so we have to be very selective. Some swings will be there. 22,050 will be the hurdle. I'll watch that. Till it doesn't surpass, I'll go with sell on bounce for day point of view. But stock wise, positive on the Motherson Samvardhan. We are expecting some up to consolidation breakout is clearly visible. 114 is the support for 125. Havels is other name where we have seen consolidation breakout. Stock can head towards 1600 zone. So Motherson and Havels will be two names to keep on radar for positive side.
All right, those are the strategies. But then markets have opened, of course. The Nifty has opened below that 21,950 mark. Mildly lower start this morning. Even the mid-cap end of the market, the mid-cap index, if you look at that, mildly negative after 2% cut yesterday. We'll have to see whether or not this selling, accelerates or not, given the fact that, we had that SEBI advisory to put some protection, investor protection, policies in place. So, of course, reacting to that, we saw a 2% cut coming in the mid and small cap end of the market yesterday, but today as well, weakness there across the screens. You have Sensex down somewhere around 100 points. And Nifty, 21,900, we are hurtling towards that level. We'll have to see whether or not, we manage to defend that 21,900 level now or not. If you look at some of the movers and shakers on the Nifty, Bajaj Auto, extending its losses. Today is a record day of the buyback. So another 3% cut coming in. Yesterday also we saw 4% cut coming in on this counter. HCL Tech, Tata Consumer, Tech Mahindra. So all the tech names under pressure today. HCL Tech, Infosys, Tech Mahindra, TCS, all of them under pressure. Even the likes of HDFC Bank, 0.4% down. Britannia, BPCL, Ultratech Cement, Nestle India, Dr. Reddy's. So even Pharma Pack under the weather today. Cipla and Dr. Reddy's being the top losers on the Nifty. On the other side, you have Reliance Industries, on the back of the merger that has been announced with Disney. The stock is the top Nifty gainer today, 1% up. Coal India also 0.6% higher. JSW Steel. IndusInd Bank is holding out, and so is SBI. L&T, Bharti Airtel, NTPC, these are some of the other movers in trade. If you look at the broader end of the markets, as I mentioned, mid-cap and small-cap both under pressure. And if you look at some of the mid-cap movers this morning, you have Triveni Turbine, among the Nifty 500 gainers. Aside of that, KSB pumps on the losing end, 4%. Brightcom continues to be under pressure. Paytm, that stock is down 4% today. And so is Indiabulls Housing Finance. So that was, how the markets have opened, looking weak, and, mid and small caps also under pressure. But let's see how things go on from here and whether or not we manage to see some bit of buying at lower levels or not. But at the moment, 21,920 or 29 is where we are at. Aside of that, as I mentioned, Reliance is among the top gainers, and so is Coal India, that has snapped out of a losing streak. Adani Ports is seeing some bit of buying interest, and NTPC among the gainers, and so is Tata Steel. But, let's go back to Chandan then and talk about Shriram Finance. Pull up that stock as well. It has made an entry into the Nifty, and the changes, of course, will come into effect from the 28th of March. Shriram Finance saw some bit of selling, in the run-up to this, to the changes announced on the index, right? So, how would you place yourself when it comes to this particular stock now?
So because of this, some buying flow could be there, but the stock has turned quite volatile. We just need a decisive range breakout, then only the first leg of rally could be seen. As of now, 2250's major support hurdle comes at 2520. So there is the broader trading range. So not getting the smaller range, but yes, we have to play the broader range. But here we'll go with buy on decline stance. If it corrects to us 2350, we can accumulate for some upsurge in the count.
All right. And what about the Reliance Industries? Top Nifty gainer today, 1.5%, and it's trading somewhere around 29.57. Here on, how would you strategize?
So Reliance comparatively did well in the entire series, but yes, was down on last trading session. I think it's up by around 8.5-9% in the entire series and supported well for Nifty to hold near 22,000. So major trend is intact. We have noticed put writing, so not expecting major decline. With support of 2900 zone, it has potential again reclaim the 3000 marks.
I want to talk to you about Coal India. This stock had come under pressure lately, but it has signed a JV with BHEL to undertake coal to chemicals business. Among the gainers today, would you advise a trade here in Coal India now?
Yeah, comparatively, the stock is holding well, and we need to find out the stocks where stability is there and there is no major pressure even after the market decline. So as of now, it witnessed some decline in last few days, but major support goes near 425. So I think with support of 425, conditional trade can be seen towards 455 zone.
All right. Tata Motors, we have a downgrade coming in from CLSA on this counter. CLSA has downgraded the stock to outperform from buy, and target price is at 1,061. Of course, the stock has had a fairly good run, somewhere around that 52-week highs. Should one play for a 4-digit figure here, 1,000, 1,050 on the upside?
I think you missed the name or
Tata Motors.
Okay, talking about Tata Motors,
Right.
comparatively, we have positive stance on the same. In fact, we'll go with buy on decline stance. Major trend is turning positive. So let it come near 925. We'll buy for an upside move to 1,000 this time.
All right. Also, we're getting your thoughts on a UPL now, Chandan. Stock has, been making new lows, and whatever attempts it makes at a recovery doesn't sustain. Should one really stay away? And if anybody is holding it, do you think it's time to get out of it?
Yeah, I'll avoid such name because these stocks are already under pressure, and especially when market is down, many good quality stocks are at lower price. So why should I pick the name like UPN and all? Risk reward ratio might be favorable, but trend is down. These stocks are continuously making lower top, lower bottom. So I'll avoid. In fact, looking for some downside move towards 450.
All right, that's the view then on a UPL. But hold that thought. We'll come back and take some viewer queries and discuss them with you. But let me also bring on board Dhiraj Agarwal, who's the MD at Ambit Investment Managers, joining in this morning. Great to have you on the show, Dhiraj. Yesterday's correction, does it really give us a trailer of what's to come, or do you think there'll be some buy on dip, happening at lower levels, and a deeper correction could be ruled out from here really?
I think a deeper correction can easily happen this year. Whether the correction has started or whether we chop around for some more time and then we can see a correction. But there are reasons to believe that a deeper correction can happen. If you see the recent results, the quarterly numbers, the Nifty earnings growth is only 14% as compared to 27-28% of the last few quarters. And sales growth is about 6%. So sales growth has been weak in the 5 to 6 range. The positive impact of the margin is showing signs of wearing off. If the sales growth does not pick up in the subsequent quarters, earnings could disappoint a little bit more, and that could set up the backdrop for a correction.
And how are you approaching the mid and small cap space right now? Of course, I spoke about the SEBI advisory on, on putting in some kind of investor protection in place, given the kind of, froth building up in the broader end of the markets. How would you really approach this space now? Is this a good time to now, switch to large caps, or how would you really approach this? Because we've seen a very sharp run up in the broader end of the markets.
The biggest problem with the small and the mid cap space is that it's very difficult to paint them with a single broad brush, because the kind of companies, sectors, and even within a sector, the kind of companies and their performances are just so diverse. So I prefer to look at mid and small cap space as largely a stock pickers market. One should not bother too much about a call on the asset class per se. I mean, obviously, there are times when the mid cap index is down 10 or 20%. Everything will hurt a little bit, some less or some more. But it's just better to treat the whole mid cap universe as a completely bottom up individual stock picking market rather than taking a call on the index. It just hasn't worked.
Right, within the mid-cap space, a lot of sectors and stocks have run up quite a bit, right? When you say it's a stock pickers market, which are the pockets really, are there at the juncture that present that stock picking opportunity?
So that's, without going into specific names, there are still a lot of good quality companies within the mid or small cap space which are trading at reasonable valuations. And there are a lot of poor quality companies which are trading at valuations which is completely unjustifiable at this point of time. So my recommendation on mid and small cap space is simply look at the quality, look at the earnings, look at the quality and sustenance of earnings. A lot of times, because of short-term cyclical factors, earnings seems to be appearing very strong, and the growth appears to be very, very powerful in the near-term few quarters, maybe a couple of years. But one has to take a call on sustenance beyond that at this point of time. So, as I started by saying, markets can see a meaningful correction. It will not be an easy market in 2024, and hence a little bit more discerning stock picking is going to what work, as compared to, let's say, in the last 9 or 10 months, we just would have picked anything and the stocks went up.
Right, let's talk about the media space. A lot is happening in this space, right? We had the Zee-Sony merger, hitting a roadblock. And this morning, of course, there's news flow that Reliance Industries has, announced its JV for the India business merger with Disney, right? How do you think this deal will change the, entire landscape in the media space? Of course, for Reliance, of Jio as well stands to benefit given the fact that it provides bundled services. So how do you think the entire dynamics in the media landscape will change post this deal?
So if you look at both these events, one getting concluded successfully, the other one attempt was made but didn't get concluded. The basic underlying trend in both is similar, which is the industry is trying to consolidate. And the industry is trying to consolidate because there are far too many players. There are global players and there are domestic players, and there are far too many players competing in the same space. And this is a classic phenomenon in any industry when things are looking rosy, investors are willing to give high valuations for just, the eyeball equivalent of .com, which is number of downloads, number of app downloads, number of views, etc., without bothering about the profitability. At some point of time, the profitability concerns start coming in, and that's when the industry consolidates. So it's a very welcome trend. If maybe there is some more consolidation which is required in the industry, and then it can become like, if you take a 5-year or 10-year view, it can become like any industry which has gone through consolidation. Take telecom as an example. A lot of players came in 20 years ago, and then there was a shakeout, there was consolidation. And now it's largely a 3-player market, and the fundamentals are looking good. So I think that process has started.
And what about the new age space, Dhiraj? PB FinTech, for one, has been doing extremely well. It hit that 50,000 crore rupee market cap milestone recently. It has got the license to be a composite broker, right? That facilitates its entry into the reinsurance business as well. So within the new age basket, are you finding value in the likes of PB FinTech, even Zomato for that matter, given the fact that it has turned profitable now? What are your thoughts on this entire space?
So if you see, some portions of the new age industry has already gone through, either they never were over-competed or they have already seen some amount of consolidation. So you mentioned Zomato, for example. So food delivery right now is just a 2-player market. Just fantastic economics out there. At one point of time, it appeared, let's say 2 or 3 years ago, that everybody wanted to do food deliveries. There was Uber Eats, and every grocery company wanted to do food delivery. Amazon wanted to do food delivery. Right now, it's already it didn't have to go through a very painful period of shakeout, surprisingly, but it did happen that it's now only a two-player market by and large. There may be one or two other smaller players out there trying to nibble away. So the long-term economics are very good in terms of customer usage habits. When once you get used to the convenience of just getting on your phone and ordering stuff, it's very difficult to come out of that cage, right? Even if the delivery feel it'll happen. I, for example, quite often in the morning when I need a loaf of sourdough, I just go onto one of the apps and just order it. I mean, I know for a small price item like a loaf of sourdough bread, the service charges or the delivery charges are way too high. But it doesn't matter. Now I'm just too lazy to take out my car, drive and go buy it myself. So a lot of these new age businesses always made sense in terms of the problem they were trying to solve, in terms of the jobs they were trying to do for the customer. There were two issues. One is because of the euphoria, the valuations became too high. And second, because everybody wanted to enter the same space to capture the valuation space, there was hyper competition. And in a couple of those areas, like InsurTech is one example you gave, food delivery is another example you gave. Competition is now beginning to look a little bit more sane, and hence it's a long runway for growth for these companies.
Okay, that was about the new age stocks. Sourdough bread, I like that quite a bit. So that's something that even I order quite often. But lastly, what are your thoughts on the OMC pack, particularly from the from the PSU basket? The view on the street is very divided when it comes to OMCs. There's one section that believes that there's still a lot of upside going forward, and there's one section that believes that it is priced to perfection. And another, view is that, it has run up ahead of earnings. Do you see value in OMCs at the current level?
Long term, I think there's more to go. When market talks about price to perfection, especially for the sectors which come down from deeply undervalued situation, I think they miss one critical point, that maybe some kind of mean reversion has already happened, but sectors never, or stocks never go from 3 sigma below to mean and just reverse from there, right? I mean, we have seen whenever a sector turns up in terms of its fundamentals, momentum, as well as the market flavor, they always go 2 to 3 sigma above mean as well. And that's, so most stocks and valuations actually, the journey look a bit like sine curves. So if this is a line of best fit, they tend to drop a little bit below mean when the dynamics are not great. They go above mean when the dynamics are fantastic. So in the near term, after a stupendous run over the 2 or 3 months, maybe they consolidate a little bit. But longer term, I think, so long as the regulators fully respect the fuel price decontrol mechanism, and some tests might come at some point of time with crude rising if it does, I think there is a longer term, the fundamentals still look quite strong. I don't think valuations are overstretched. They probably are no longer cheap, but I don't think they're overstretched by any stretch of imagination.
All right. The long-term, things look pretty good for these OMCs. Fundamentally, they're pretty strong. With that, Dhiraj, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. Look forward to having a longer conversation with you sometime soon.
Anytime. Thank you.
Well, with that, let's take up some viewer queries that are trickling in this morning with Chandan. Chandan, we've already discussed Coal India. The stock has snapped out of its losing streak, but we have a query coming in from Rakesh. He has 7 lots of Coal India 445 call, at an average price of 5 rupees, right? So he wants to know, he's right now in loss of 50,000 rupees. He wants to know whether he can expect to recover these losses, or should he go ahead and book his losses?
See, again, the momentum is totally missing, and he's having OTM strike, out of the money strike of the particular stock. If he's holding for the current month, then already it's gone. If holding for next month, then some chances are there. But as of now, my only suggestion is he's having 5 lots. If it goes below 427, then exit from whatever the losses you are having. Because as of now, there are very less chance and less probability that you will be in profit or you will be at cost. So try to exit in some losses if you can do.
All right, try to book some losses. That's the call. Hope that answers your query. The next query is coming in from Satvika, And she wants to know your thoughts on Aditya Birla Fashion. This stock has come out of the F&O ban as well, Chandan. And last 5 sessions, it hasn't done much. What's the strategy here then? Should one look at buying into it? And if somebody is already, holding this stock, should they hang on, or, is there a trade?
See, like the overall stock is in a kept upside. However, multiple supports are there. We have seen lesser volatility in last 3-4 days. That is a good thing, but as of now, it's in a broader range. I'm not expecting a major uptick, but upside is likely to be kept. So 235 is hurdle. Till it doesn't go above 235, there are potential to retest 220 zones. So I'll be expecting kept upside or limited upside. So need to play with the strict levels in the counter.
All right, that's the view on Aditya Birla Fashion. But Satya CK wants to know your thoughts on an L&T. Stock has actually done nothing over the last 1 month, but it has seen some bit of steam picking up over the last 5 sessions. We've seen a good 3.5 kind of an uptick. Here on, how should one trade into this?
Yeah, one can hold the long positions. I'm expecting some positive tick in the counter. With support of 34.20, one can look for an upside move towards 36.15 in Larsen and Toubro.
What about Varun Beverages? Rajesh Veera wants to know your thoughts. He has 50 shares at an average price of 755 rupees. It has, of course, been in a corrective phase. Should he hang on, or maybe average?
So it's regard to stock. Yeah. Which is stock, Nandita, please?
Varun Beverages.
Okay, so talking about VBL.
Yeah.
So VBL major trend was positive, but we have seen a major decline in last 3 days. So if he's a trader, then better avoid. If he's an investor, then he can at least look for 1200, 1230 kind of zone to get some stability.
Right. I think we also have a query coming in on a Yes Bank. Sukurta has written in and wants to know your thoughts on this stock. He's been holding on for the last 1 year and he had purchased it at 16 rupees. It looks like he's an investor. He's already been holding on for 1 year. So, with a 1 to 2 year time horizon, how should one approach this?
So as of now, we witnessed some recovery to 32 and again it's back to 24. So it's very tough for stock to hold at higher levels. So my only suggestion that he or she is in profit of 50% and better to book some profit and then let the rest capital to drive with the view that some uptick could be there. So no major conviction, but yeah, looking at the scenario, it can hold 20, can bounce to 28, 30.
Right, that's the view. The next query is coming in from Rupak Mehta. He wants to know your thoughts on an Asian Paints. Of course, the stock has been in a downtrend over the last 4 to 5 sessions. We've seen a cut of somewhere around 7 to 8% on the stock. Is it a good time to buy, or do you think, of course, the industry dynamics changing, one should perhaps look at, a different play or, avoid the paint sector? How would you look at it?
Yeah, so totally agree with your comment that yes, industry dynamics are changing. And I think that is the reason that in last many years, this stock has seen profit booking. Earlier, it was one of the strongest names if I start from 2008, 2009. But in this year, it totally got stuck. It might be competitor or dynamics are changing. So I'll avoid being a trader, but investor, I think one can hold. But as of now, I'm not getting any sense and conviction to hold and buy and look for some uptick. Rather, I can go and be in the selective other sector, which has potential to perform and generate alpha.
Right, that's the view on the paint space. Then, we have a query coming in on Bharat Dynamics as well. Nana Prakasam has written in and wants to know your thoughts. Of course, Bharat Dynamics is one of those stocks that has come off quite a bit from 52-week highs, right? Of course, a section of the PSU basket has seen quite a bit of correction after a stupendous rally, and BDL, seems to be one of them because 100 rupees or 120 rupees off its 52-week highs. Do you think these are the levels one should enter into the stock, or do you think wait for some bit of more correction to come in before entering?
The major trend is positive. We have positive stance on most of the defense name. So one can accumulate. Yeah, some volatility could be there because mid-cap, small caps are turning with some roller coaster ride. So if he gets near 1750, then accumulate for upside move towards 1900 to 2000.
Okay, last couple of queries now. This one is coming in from Mark Hughes and he wants to know your thoughts on a PNB Housing Finance. How is this looking on the charts now?
So PNB structure is weak, let it correct. I think it can drip down to a 650 zone.
All right, weakness on the charts when it comes to a PNB housing finance. Well, that wraps up our query segment for today. But over the next couple of days, any trades that is standing out for you, Chandan?
Yeah, so like we have to be very selective. Today's monthly expiry, so let the roller coaster complete. If I have to pick a few name, given the recent market scenario, then one or two stocks I can select from Nifty Auto Basket. I'll go with buy on TVS Motor. One can buy with support of 2070 for an upside move towards 2200 level.
All right, those are the recommendations coming in from Chandan. With that, Chandan, thanks a lot for taking our time and joining in, and sharing your thoughts on so many stocks, and of course also addressing our viewer queries this morning.
Thank you.
Well, with that, we've come to the end of this edition of Opening Bell. Thanks a lot for tuning in, but of course, stay tuned to Money Control for all your other news and updates.